of course, the world is very much focused on what's happening in China, the eco data, the stimulus, the market's really not responding. Are we missing any opportunities out there in smaller markets?
Great question, Sherry. Thanks for having me on the show. We are, certainly going through a more difficult time in Asia than in other parts of the world. And when we look at equity markets, it tends to really be driven by earnings. Earnings revisions for Asia have been really pretty disappointing compared to most developed markets. And what we would advise investors to be doing right now, as you think about how to allocate one's portfolio in an Asian context, you have to look at opportunities that are not all completely synchronized and correlated. And that's why, from our perspective, some of the smaller Asian markets that often don't get that much attention, be it the Philippines or Vietnam, are actually perhaps worth a second look at this time.
Is also your effort trying to avoid correlation a reason why you're suggesting investors across Asia also keep 2/3 of their equity exposure in the U.S., according to your notes?
Yeah, we do find that Asian investors in particular systematically have this home market bias where they want to own Asian equities first. And that has been something that hasn't been great for their financial health, especially when we look at the 10 or 15-year Sharpe ratio, which has been far higher for U.S. equities at 0.5 compared to about 0.1 for Asian markets. And we do think that, especially at a time when earnings continue to be very resilient in the U.S. And where arguably you have tech actually coming out of an earnings recession over the past 18 months. This is a time where the U.S. equity market is perhaps almost in something of recovery mode, even as nominal GDP is dropping. On the other hand, when we look at markets in Asia, be it China or others, the double-digit earnings growth that we had seen forecast at the beginning of the year is probably more likely to be in the 0 to 5% range for this year.
David, we've seen some of the popular redirection of flows away from China into markets like India, into Japan, but given how extended certainly some of those popular markets are there other opportunities for that, I guess, even within an emerging market, Asia play?
Well, there's always opportunities on a bottom-up basis, but when we look at Japan, we understand why people may feel like it is extended, given how it has performed relative to its Asian neighbors. But actually, from a valuation and from an earnings perspective, especially earnings momentum, we're finding quite a lot of opportunities in Japan right now. And so given the abundance of earnings growth that you'd expect in a weaker yen environment, plus also the added tailwind of corporate reform, that is, I think, making Japan perhaps the most attractive opportunity of all in this region.